All right, let's dive into the world of energy stocks. We've got this really interesting article from the Motley Fool all about S&P 500 companies in the energy sector.
Okay, yeah.
And, it talks about how their stocks are down, some of them as much as 23%. Now, that might scare some folks off, but could this be a good time, for those long-term investors to maybe jump in?
Yeah, it's certainly an interesting proposition, especially with some big names like Warren Buffett making moves in these
Oh,
companies.
yeah, Warren Buffett.
He's known for his buy and hold strategy, so it definitely raises an eyebrow when he starts buying.
For sure.
The article dives into this a bit and explains that this dip in energy stocks seems to be pretty closely tied to the drop in West Texas intermediate crude oil prices. They've fallen about 14.3% over the past year.
So are we saying that energy stocks are basically on sale just because oil prices are down?
That's a great way to put it, but you have to remember, energy prices, they're cyclical.
Right.
They go up, they go down. And these kinds of downturns, this is what a lot of investors, especially those savvy ones, look for. They can snag some potentially undervalued stocks.
It makes sense. So let's get into the specifics here. The first company is Occidental Petroleum, ticker symbol OXY. Now, if I remember correctly, this is the one that Warren Buffett seems to like, right?
You got it. It's actually the sixth largest holding in Berkshire Hathaway's portfolio.
Wow, that's pretty significant.
Yeah, that's a big vote of confidence. What's interesting is Occidental had a really strong year in 2024. They achieved record U.S. oil production. They focused on strengthening their balance sheet, actually paid off $4.5 billion in debt ahead of schedule, and they even went out and acquired Crown Rock, which expands their presence in the Midland Basin, a very oil-rich area of West Texas.
So even with oil prices down, they're still, making big moves. But how does that financial strength, how does that benefit investors, especially right now with things being a bit uncertain?
Well, think of it like this. They've got a really strong foundation.
Right.
So that means they're much better equipped to ride out these fluctuations in oil prices compared to companies carrying a lot of debt. Makes them potentially a less risky bet in what is often a volatile sector.
Makes sense. Okay, on to the next company, ConocoPhillips, ticker symbol COP. The article highlights their dividend yield at 3.5%. That definitely got my attention.
Oh yeah, and there's even more to like. They're currently trading at a discount, meaning their stock price is lower than what their financial performance might suggest. We're looking at 5.2 times operating cash flow, which is significantly lower than their 5-year average of 6.2.
Okay, now hold on. Remind me again. What does operating cash flow mean? What does that tell us?
Basically, it represents the cash a company generates from its core business operations. So the lower that number, in theory, the better.
Okay, got it. So a lower number in this case suggests they're generating a healthy amount of cash compared to their stock price.
Right, making them potentially very attractive for investors looking for value.
They also recently acquired Marathon Oil, a huge $22.5 billion deal. What's the strategy there? What were they going for?
Well, that acquisition brought in a ton of resources. We're talking 2 billion barrels of low-cost oil reserves added to their portfolio. So that gives them a competitive edge, especially when prices are fluctuating. Plus, they're expecting what we call synergies.
Synergies.
They anticipate saving around $1 billion in 2025 just from combining operations and eliminating redundancies between the two companies.
Ah, I see. Okay.
Another interesting point is ConocoPhillips actually grew its reserves in 2024 to 7.8 billion barrels of oil equivalent. That's a combination of oil and natural gas, by the way, up from 6.8 billion in 2023.
Wow, that's some serious growth, especially with oil prices down. But all this focus on dividends and big acquisitions, is there any concern they might be, overextending themselves financially?
That's where their conservative approach to shareholder returns comes in. They've actually publicly committed to returning at least 30% of their operating cash flow to investors. That shows a focus on financial stability, thinking long-term sustainability, rather than just chasing those short-term gains.
Gotcha. Okay, last one on our list today is Devon Energy, ticker symbol DVN. Now, their stock price, it's been down, but the article suggests their actual performance is telling a different story. What's the deal there?
Yeah, it's a classic example of how stock price doesn't always tell the whole story. Devon Energy actually hit record oil production in Q4 of 2024. They were pumping out 398,000 barrels per day, largely driven by their acquisition of Grayson Mill. And that was on top of their record, 737,000 BOE. Barrels of oil equivalent extracted daily in 2024. And they're projecting to grow even more, reaching somewhere between 805,000 and 825,000 BOE per day in 2025.
So they're producing more oil than ever, which seems like a good thing, but their stock price isn't reflecting that. What's the disconnect?
Well, their strategy is a bit different. While they do have a dividend, they're really prioritizing share buybacks right now over variable dividends. So they're using those profits to buy back their own stock, which, signals that they think it's currently undervalued.
Interesting. Okay.
They're still committed to returning up to 70% of free cash flow to shareholders, but they want to make sure their balance sheet is strong first.
So it's like they're playing the long game here, building a strong foundation before potentially upping those dividends. But what does this tell us about, I don't know, their confidence in the future? How does that approach compare to what we were talking about with ConocoPhillips?
It seems Devon Energy is betting big on future growth. They believe their current stock price isn't reflecting their true potential. That's different from ConocoPhillips, who are focused on those consistent dividends, attracting investors who are looking for that steady income.
Right.
Both strategies have pros and cons, and ultimately it comes down to investor preference. What are you looking for in an investment?
All right, so we've got these three energy giants, Occidental, ConocoPhillips, and Devon Energy, all navigating this market downturn, but each with their own approach. What jumps out at you about their strategies, and how can that help our listeners understand the bigger picture of investing in the energy sector right now?
What fascinates me is that all three are showing this real strength and resilience, even with falling oil prices. They're not panicking. They're making these strategic decisions that are focused on the long term. And that's critical for investors to understand.
Okay.
Because it suggests that even in a challenging market, these companies are in a good position to weather the storm, so to speak.
That's a good point. So even though the oil prices are down, these companies, they're still doing well. They're making smart moves. But how do they fit into this whole, this global shift towards renewables? Are they adapting to this new energy landscape?
That's the million-dollar question, isn't it?
Yeah.
And it's something we're going to tackle head on in the next part of our deep dive.
All right, so stay tuned, folks. We're going to be diving even deeper into this fascinating world of energy investing. Welcome back to our deep dive into the world of energy stocks. Before we jump into the next company, I want to circle back to this transition to renewable energy we were talking about. It's a hot topic. How are these oil and gas giants approaching it? Are they embracing it, ignoring it, somewhere in between? What's the deal?
Yeah, it's a bit like a high-stakes chess match, isn't it?
Oh, yeah.
You've got these big players in the oil and gas industry.
Yeah.
And they're trying to figure out how this shift to renewables is going to play out,
Yeah.
Some are making bold moves. Others are taking a more, cautious approach.
So where do these companies we've been talking about fit into this? Occidental, ConocoPhillips, and Devon Energy. Are they holding on to the old ways, or are they adapting?
Let's start with Occidental Petroleum. They've actually been making headlines lately for their investments in carbon capture technology.
Carbon capture, that sounds pretty futuristic. What is that exactly?
It's basically a technology that captures carbon dioxide emissions from, things like industrial processes, power plants. The idea is to prevent those emissions from going into the atmosphere and, contributing to climate change.
So it's like a way to make fossil fuels cleaner, but is Occidental really committed to this, or is it just, a PR stunt? Are they just trying to look good for investors who are concerned about the environment?
Well, that's the million-dollar question, right? Some people see carbon capture as a way to kind of, prolong the life of fossil fuels.
Right.
While others see it as a necessary bridge to a cleaner future.
Okay.
It's a very complex issue with strong opinions on both sides.
It sounds like they're trying to have their cake and eat it too, right?
Yeah.
Reduce emissions, but still, profit from oil and gas.
It's a delicate balancing act, that's for sure.
Yeah.
And remember, the energy transition, it's not a flip of a switch.
Right.
We can't just suddenly stop using fossil fuels. There's still a huge demand for them worldwide.
So it sounds like Occidental is hedging their bets, investing in carbon capture, but also still in traditional oil and gas production. What about ConocoPhillips? Are they doing anything in this renewable energy space?
They've taken a different approach. They're focusing mainly on reducing their environmental impact through what they call operational efficiency. So they're investing in technologies that minimize flaring, which is, the burning of excess natural gas.
Oh, right.
Reducing methane leaks and improving energy efficiency in their overall operations.
Okay, so they're trying to make their existing oil and gas operations cleaner, more sustainable, rather than jumping directly into renewables themselves.
Yeah.
It's interesting how each company is taking a slightly different approach.
Yeah, it reflects the fact that there's no single right answer here. The energy landscape is changing so quickly, and everyone's trying to figure out how to best position themselves for the future.
What about Devon Energy? Where do they stand on all of this?
Well, they've been pretty quiet on the renewable energy front, to be honest. They've really been concentrating on their core oil and gas operations. Haven't made any big announcements about investing in renewables.
So they're sticking to their guns, so to speak.
Yeah, it seems that way for now. They're betting on the continued demand for fossil fuels, especially natural gas. They believe that natural gas is going to be a key player in this energy transition.
Okay, so they see it as like a cleaner burning alternative to coal, basically.
Exactly. They're positioning natural gas as part of the solution, not the problem.
But isn't there a risk that strategy could backfire, with this global push for renewables?
There's always risk in any investment strategy. Devon is essentially arguing that natural gas is going to remain essential for years to come, even with renewables taking a bigger slice of the pie.
Okay, got it.
Providing reliable and affordable energy, kind of like a bridge during this transition period.
It's fascinating to see how these companies are adapting or not adapting. What do you think this tells us about the broader investment landscape in energy?
It really highlights that the energy sector is in a state of flux right now. Things are changing. We're seeing a shift in investor sentiment, more and more capital flowing into renewable energy, which is creating both opportunities and challenges for those traditional oil and gas companies.
So what does this mean for investors? What are some key trends to watch in this space?
One big one is the falling cost of renewable energy technologies. Solar and wind power in particular are becoming very cost competitive with those fossil fuels.
So it's not just about being eco-friendly anymore. It's also about the bottom line. Renewables are becoming a good financial investment.
You got it. We're seeing more and more investors who are realizing this and shifting their focus. They see the potential for financial returns and positive environmental impact.
What about governments? Are they doing anything to kind of encourage this transition to renewables?
Oh, absolutely. Many governments are rolling out policies that support renewable energy. Things like tax credits for renewable energy projects, subsidies for clean energy technologies, and even mandates that require a certain percentage of electricity generation to come from renewable sources.
So it sounds like the political landscape is generally favorable for renewables.
In many parts of the world, yes. These policies are creating a more attractive investment environment for companies in that space.
Okay, let's say I'm an investor and I'm intrigued by all this, but I'm also a bit cautious. What are some things to consider before diving in?
Well, caution is never a bad thing when it comes to investing. It's important to remember that renewable energy, as a sector, it's still fairly young.
Right.
There will be companies that succeed and companies that fail. Not everyone is going to be a winner.
So do your research, choose wisely, that kind of thing.
Exactly. Look for companies with strong management teams, proven technologies, and a good track record of success. And just like with any other investment, it's crucial to diversify. Don't put all your eggs in one basket.
Diversification is key. Okay, but what about the companies we talked about earlier? Occidental, ConocoPhillips, and Devon Energy. Do they have a place in a portfolio that's, focused on renewable energy?
That's a great question. It really comes down to your individual investment strategy and risk tolerance.
Okay, so how can listeners evaluate these companies in light of this whole renewable energy transition? What should they be looking for?
First, look at their commitment to reducing their carbon footprint. Are they investing in technologies that will actually lower their emissions? Are they setting targets?
So we want companies that are walking the walk, not just talking the talk.
Exactly. Next, consider their diversification strategy. Are they moving beyond oil and gas? Are they exploring investments in renewable energy projects?
So are they adapting to this changing landscape?
Precisely. And finally, and this is key, you need to evaluate their financial strength, their ability to generate returns in a world that's increasingly moving away from fossil fuels. Are they managing their debt? Are they generating enough cash flow?
So it's a balancing act. We're looking for companies that are forward-thinking, but also financially sound.
Exactly. It's a complex equation, but it's something that smart investors really need to think about as this energy landscape continues to evolve.
Welcome back to our deep dive into energy stocks. We've been talking about Occidental, ConocoPhillips, and Devon Energy, and how they're all dealing with this shift towards renewable energy. But I think now's a good time to kind of zoom out a little bit, look at the bigger picture of energy investing.
Yeah, absolutely. And what's really interesting is that it's not just about oil and gas anymore.
Right.
Renewable energy sources, Solar, wind, even hydrogen. They're all attracting a lot of attention, a lot of investment.
So is this a complete shift away from fossil fuels then? Like, is that where all the smart money is going?
It's not that simple. The transition is happening, sure, but it's going to take time. Fossil fuels, they're still going to be part of the mix for a while, especially in certain industries.
Okay, so it's not an either thing. It's more nuanced than that. But for investors who are looking to, I don't know, capitalize on this transition, what are some of the big trends to keep an eye on?
One major trend is the cost. Renewable energy technologies are getting cheaper and more efficient. Solar and wind power, in particular, have become much more cost competitive with fossil fuels.
So it's not just about saving the planet anymore. It's also about, cold, hard cash. Renewables are becoming a smart financial play.
Exactly. And we're seeing that shift. More and more companies, more investors recognizing this potential, both for financial returns and, for a positive impact on the environment.
What about government policies? Are they doing anything to help accelerate this transition?
Oh, yeah, big time. Many governments around the world are putting policies in place to support renewable energy. We're talking tax credits, subsidies, even mandates that require a certain percentage of electricity to come from renewables.
So the political landscape is, generally speaking, favorable for renewables.
In many parts of the world, yes. These policies make it a more attractive space for companies, for investors.
Okay. Let's say I'm an investor and I'm intrigued by all this renewable energy stuff, but I'm also a little cautious. What should I be thinking about before I jump in?
Caution is never a bad thing, especially with investing. It's important to remember that the renewable energy sector, it's still relatively young, it's still evolving. There will be companies that succeed, and there will be companies that fail. It's not a guaranteed win.
So do your research, choose your investments carefully, all that good stuff.
Absolutely. Look for companies with strong management, proven technologies, and a solid track record. And, like with any investment, diversification is key. Don't put all your eggs in one basket.
Right, diversification, always important. Okay, but what about the companies we talked about earlier, Occidental, ConocoPhillips, and Devon Energy? Do they fit into a portfolio that's focused on renewable energy?
That's a great question. It depends on your strategy, your risk tolerance. If you're looking for companies that are all in on renewables, these might not be the perfect fit. But if you're looking for companies that are making an effort to transition, to diversify their energy portfolios, then they're worth looking into. Occidental, for example, with their investments in carbon capture, they're trying to lower their emissions, even while they're still producing oil and gas. ConocoPhillips, they're focused on making their current operations more efficient, more sustainable. And Devon, well, they're sticking with oil and gas for now, but it'll be interesting to see if they make any moves towards renewables in the future.
So there's no easy answer. It's about understanding the different approaches these companies are taking and figuring out if any of them align with your own investment goals.
Exactly, and that's why it's so important to do your own research. Stay informed about what's happening in the energy sector. Things are changing quickly, and what's a good investment today might not be a good investment tomorrow.
This has been a really fascinating deep dive. We've covered a lot of ground today. We talked about the current state of energy stocks, the opportunities and challenges presented by this shift to renewables, and, some key trends to keep an eye on.
Yeah, it's a really exciting sector, and it's clear this energy transition is having a huge impact on the investment landscape.
All right, well, as we wrap up, what's the one key takeaway you want our listeners to remember?
This energy transition, it's not a fad. It's a fundamental change. And it's creating a dynamic and potentially lucrative landscape for investors who are willing to adapt and evolve with it.
Great insight. Thanks for joining us today. And to our listeners, as always, do your own research, consider your financial goals and your risk tolerance, and happy investing.